In this video, we're going to continue our series on supercharging your Roth, specifically highlighting the Mega Backdoor Roth strategy. We'll begin by highlighting some possible contribution buckets to an employer-provided retirement account, then shift to how the Mega Backdoor Roth works, and then talk about some important considerations and wrap up with who it could be applicable for and who it may not be applicable for. So let's begin with the possible contribution buckets to an employer-provided retirement plan. We'll use the 401k since it's the most common type of retirement plan out there. So when you think of contributing to your 401k, most people know of the pre-tax and Roth contribution, right? But some plans allow for a third type of contribution in the form of an after-tax non-Roth contribution. But before we get into that, let's first review the pre-tax and Roth. So with the pre-tax 401k contribution, you're getting a deduction upfront on those contributions. So you're saving taxes in the current year. And because you're saving taxes in the current year, you're going to pay tax later on the back end in the form of withdrawals. Now with the pre-tax 401k, you can put up to $23,500 into that if you're under the age of 50 for 2025, and up to $31,000 if you're age 50 or older with your additional catch-up contribution. And then there's also a new rule in 2025 where you could put up to $34,750 into that plan if you're age 60, 61, 62, or 63. But this considers your Roth contributions as well, right? So if you're contributing to Roth, that's going to reduce your available pre-tax contributions. Now with the Roth, you don't receive that tax deduction up front. So you're contributing with after-tax dollars. And because of that, the IRS is going to bless you with tax-free withdrawals on the back end, assuming you meet the qualifying criteria. Now, with the Roth as well, you have the same types of contribution limits. So you can contribute up to the $23,500 if you're under the age of 50, $31,000 age 50 or older with the catch-up, and $34,750 if you're 60, 61, 62, or 63. But again, this is going to consider your pre-tax contribution. So with that $23,500 limit, if you're under the age of 50, that can be all pre-tax, all Roth, or a combination of the both, as long as the total of those contributions don't exceed the $23,500. You can't do $23,500 to Roth and $23,500 to pre-tax. It considers both of those. Now let's talk a little bit about after-tax contributions. So as the name implies, it's considered an after-tax contribution, right? So the money that you put into it, you're not receiving a deduction, and it mirrors the characteristics of a Roth contribution. But what's interesting, though, it has a hybrid approach where you are taxed later on the earnings associated with those contributions, right? So with the after-tax bucket, the money you put into it, you can receive tax-free, right? Because you're putting after-tax dollars into it and you're not receiving a deduction. But the earnings on those contributions are subject to tax. Now, with that being said, the available contribution limit to an after-tax non-Roth bucket is going to be the max retirement contribution limit, which is published by the IRS each year and is $70,000 for those under the age of 50 in 2025, $77,500 for those age of 50 or older, or $81,250 for those who are ages 60 to 63. So it's that limit. Let's say the $70,000 minus what you put into the pre-tax and Roth, so the $23,500 maximum, minus what your employer contributes to your 401k plan, right? So you need to consider any employer match that you receive. And once you do that formula, you can equate what your available after-tax contribution is based on that. So let's talk a little bit about how the Mega Backdoor Roth contribution works. So it's a two-step process. First step is you contribute to that after-tax bucket. So you put money into that after-tax bucket, and then once the cash has settled, once it's available to be converted, the second step would be to convert it to your Roth 401k. And I mentioned here to do it as soon as possible based on that previous fact, right? Since your contributions, since they're after tax, they can be converted tax-free to the Roth 401k, but the earnings on those associated contributions are taxable. So by converting those after-tax contributions to the Roth 401k as soon as possible, you're going to minimize tax on the earnings. And that's essentially what I read right there is after-tax contributions converted tax-free, but the earnings are taxed. So in order to minimize your tax liability on the Mega Backdoor Roth, you want to make that contribution or conversion rather as soon as possible. So that's a little bit about how it works in practice. Now, what are some important considerations with the Mega Backdoor Roth? Well, first off is your employer may limit after-tax contributions, right? So in your summary plan description document or your employee benefits package, they may notate that you're limited to a certain deferral of your salary into the after-tax bucket. So I've seen 10% of an employee's salary that can be allocated to the after-tax bucket. So make sure you're reviewing your summary plan description or your employee benefits package to see how much you're available to defer to the after-tax bucket. Check that. The second is that the plan must allow in-service conversions, right? So if your employer is allowing you to contribute to the after-tax bucket, you also want to verify that they're allowing you to do the in-service conversion from the after-tax to the Roth. Third, not all plans may allow for an auto conversion of that after-tax money to the Roth. So you may have to manually move the money over, right? And that can be tedious to keep track of every time that you contribute to the after-tax, reminding yourself to convert to the Roth 401k. So a best practice could be to set a reminder, say every time you get paid to do those conversions once it's eligible. And then overall, after you do it a couple times, it's good to get a habit of how long it takes for your after-tax contributions to be eligible for a conversion. So hey, every time I get paid or every 3 weeks, I can convert my funds over. And then the final thing as relates to consideration is you're going to need to report this transaction. It's going to be dictated on a 1099-R and you'll be reporting it on your taxes. Again, the sooner that you do the conversion from the after-tax bucket to the Roth 401k, the lower your taxes is going to be. And the reasoning for this is there's not going to be enough earnings on that cash, right? So who's it for and who's it not for? Well, it can be for those employees that work for a company that allows the after-tax contribution and in-service conversion. There's a whole lot of employers that do not allow for this. So it's a small subset of employers that allow individuals to contribute to this after-tax bucket, right? So if you're part of a company where you can contribute after tax and you see that you can do the in-service conversion, then it could possibly be an option for you. But the second piece of this is it tends to make sense for those that are already maxing out their pre-tax and Roth. These are high earners that have excess cash and want to fund as much of their retirement accounts as possible, right? So if you're struggling to contribute to your pre-tax and Roth 401k, maybe the after-tax isn't a good fit, because if you want to get money into the Roth, you can just contribute Roth as it is. You don't have to go through the hoops of the after-tax bucket. Now, who's it not for? Kind of the contrast of that, right? So a lot of employees don't have the ability to contribute to this after-tax bucket. It's generally the pre-tax and Roth. So if you don't have the ability to contribute to after-tax, then this strategy is not going to be available to you. As well, employees that are not maxing out their pre-tax or Roth 401ks. So hopefully this was helpful for a good overview of the Mega Backdoor Roth strategy. I did write an article that provides a lot more detail on this, so click the top right of this video to check that out. And thank you very much. Hopefully it was helpful.